Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Today, we are doing a critical deep dive. We're looking at some really actionable data coming straight out of the junior mining sector. This is breaking news territory.
That's right.
We're talking drill results, technical studies, things that can, immediately change how you might look at some of these small cap companies from an investment perspective, their value, their risk profile.
Exactly. And our mission today, it's really about the numbers. It's quantitative. For investors who follow this space, headlines are one thing, but they need that backing.
Right, the substance.
The substance, precisely. So we're trying to cut through any, press release fluff and really zero in on the specific compelling data. What are those high-grade intercepts, the depth extensions, the confirmed recovery rates, stuff that really warrants digging deeper, doing your own due diligence because it might signal a real shift.
Okay, good plan. And we've kind of segmented this deep dive into two main areas. First up, we'll hit those, headline-grabbing discoveries, high-grade gold, polymetallics, the stuff that can really redefine a project's potential scale.
Right, the exciting stuff first.
And then we'll pivot. We'll look at crucial updates on project viability. Companies proving they can actually get the metal out of the ground efficiently and economically.
Which is just as critical, maybe even more so sometimes.
Absolutely. Okay, let's jump right into the high-grade material then. First on our list is Lancaster Resources, Inc. They trade on the CSE, symbol LCR.
LCR, got it.
And the breaking news headline, Lancaster Resources reports high-grade gold and silver assays at Lake Cargelligo. So they're confirming strong mineralization. This is their flagship project in Australia, down in the Lachlan Fold Belt. But it's the numbers, like you said, that really grab you. Sample LC0004. These are surface assays. Pretty spectacular. Gold up to 31.5 grams per ton.
Wow, okay. 31.5 greedy AU.
And silver, too, up to 114 grams per ton ag.
Okay, so what jumps out immediately is, the grade itself, right, at surface. In the Lachlan Fold Belt, you often think lower grade, bulk tonnage, finding over 30 grams per ton gold right off the bat. That's significant, way above what you might typically expect in early surface work there.
So this isn't just, there's gold here.
No. Yeah, it's more than that. It really validates their model, suggesting this spot, which they say is underexplored, might host a pretty significant high-grade system, gold and silver.
But these are surface samples. I mean, exciting, yes, but how much does that really move the needle in terms of risk or timelines? Is it just an early indicator?
Well, it's definitely an early indicator, but a very, very strong one. Think about the next step, drilling, and the cost associated, the exploration capex. When you hit grades like this in your first pass surface sampling,
it tells you where to drill.
Exactly. It gives you extremely high confidence. It practically shouts, drill right here.
Okay.
So, that means potentially less wasted drilling, less speculation, and hopefully a much faster path to figuring out if there's a real high-grade resource there.
Oh, okay.
And the silver being high, too, that's a nice kicker. It's just maybe a robust epithermal system, or perhaps shear-hosted. We'll need to see how the metallurgy looks later. Sometimes silver can complicate things, but for now, this is a big plus. Really supports making this a high-priority drill target.
Got it. Okay, let's shift gears, move over to Mexico now. GR Silver Mining Ltd. That's GRSL on the TSX venture. And this story seems to be about, geological complexity, maybe finding something bigger than expected. The headline, GR Silver Mining hits 2 new mineralized zones at San Marcial, extending the footprint of its Sinaloa project. So it sounds like one drill hole, a step-out hole they call SMS 2510A, hit 2 different zones way outside their known resource. That seems pretty significant.
Very significant. Step-out drilling success is always good news.
Okay, so first, there's a shallow silver zone. They report 9 meters, grading 374 grams per ton silver. That's high. And within that, there's 1 meter at a, frankly stunning, 1,542 grams per ton silver.
Over 1.5 kilos of silver per ton. Yeah, that's high-grade epithermal style, for sure.
But they also mention associated metals, 0.3% copper and 0.59% tungsten. You don't always see that with silver.
Exactly, that's a key observation. And then, deeper in the same hole, they hit a second zone, the gold zone. This one's wider. 33 meters, averaging 1.44 grams per ton gold. And it also has a high-grade kicker, 1.2 meters at 32.1 grams per ton gold.
Wow, okay. So silver, copper, tungsten up high, and then deeper gold. What's the interpretation here?
Well, this is where it gets really interesting for the project's potential scale. Finding that silver-copper-tungsten mix is crucial. San Marcial, historically, was known for high-grade silver veins, right? Epithermal veins. Those are often great grade. but can be somewhat limited in size or depth. Hitting this deeper stuff, especially with the copper and tungsten, that really supports their geological model. It suggests the whole area might be linked to a much, much larger system, potentially a porphyry system lurking underneath or nearby.
Okay, I hear porphyry a lot in mining. Why does that word get investors more excited than, say, epithermal?
Scale, pure and simple. Porphyry systems are, generally speaking, the giants. They're the engines that can drive the formation of surrounding deposits, like epithermal veins. We're talking potential for mineralization measured in billions of tons, not just millions.
Ah, okay. Huge difference.
Huge. So by finding these metals, tungsten and copper are often associated with porphyries alongside the gold and silver. GR Silver is essentially finding clues, evidence, that they might be getting closer to one of these massive systems. It's not just about adding a few tons to the existing resource. It's hinting at a possible game-changing increase in the project's overall size potential.
Right, so it opens up whole new exploration vectors for them.
Absolutely. Now, look, processing ore with multiple metals can be more complex. That's a factor down the road. But the potential prize, finding a major porphyry system, that makes dealing with the complexity potentially very worthwhile.
Makes sense. Okay, excellent context. Let's stay in North America, but head up to Canada. First, mining gold core, symbol FF on the TSX.
FF, okay. Abitibi region, I believe?
That's right, the news. First Mining expands high-grade discovery at Duparquet with strong results from Miroir target. Now, for a project like Duparquet, which is aiming for future development, these kinds of results seem pretty fundamental, right? They hit a standout intersection at this new Miroir target. It was wide, 25.9 meters, and the grade was strong. 3.23 grams per ton gold.
Yeah, 3.23 over almost 26 meters is definitely economic, especially near surface.
And they highlighted high-grade sections within that, too, like 11.200 grams per ton gold over 2.0 meters.
Right, and that internal high grade is important too.
Yeah.
But the real strategic value here, tying back to Duparquet being in the Abitibi and further along the development path, is where they hit this, near surface. They mentioned it's been extended down to about 100 meters depth and it's still open.
Okay, so when we talk about projects moving towards, say, a feasibility study, how much does finding high grade near the surface really impact the potential mine plan or the economics?
Oh, it's massive, huge impact. Think about starting up a large mine. Often, the most expensive initial phase is stripping away waste rock or mine and lower grade stuff just to get down to the main ore body.
Right, the pre-stripping costs.
Exactly. If you find zones of high-grade material right at or near the surface, like this Miroir target seems to be, it gives the company incredible flexibility.
Yeah.
They could potentially change the mine plan to target these high-grade zones early on.
So faster payback.
Potentially, yes. You get high-grade ore feeding the mill sooner, which means lower operating costs per ounce in those crucial early years. It generates stronger cash flow right out of the gate, and that dramatically improves the project's overall financial metrics like the IRR, the internal rate of return.
Yeah.
Gives you options, makes the whole plan more robust, especially if gold prices fluctuate. It's exactly what you want to see.
Okay, that makes a lot of sense. So that kind of wraps up our first look at grade and system expansion. Let's shift now, as we said, to that second critical piece, project advancement and viability.
Right. Proving upscale and showing you can get the metal out.
Exactly. We'll start with Omai Gold Mines Core. They trade as OMG on the TSX Venture.
OMG. In Guyana, right? Historic mine area.
Correct. The headline. Omai Gold expands Wenot deposit with high-grade drill results and updates deep exploration program. So they did confirm more resource expansion near the existing deposit. Hole 25 ODD 127 hit 3.08 grams per ton, gold over 25.8 meters. And again, a nice internal high-grade zone, 17.06 grams per ton, OO over 3.1 meters. Good, solid results.
Yeah, consistent grades, builds on the existing resource. That's good, solid work. But I think the really compelling part here, the blue sky potential, as they say, is actually in the deep exploration update.
Ah, okay. What did they find deeper?
They reported successfully hitting the Wenot Shear Corridor, that's the structure hosting the gold, about 600 meters below the previously known limits of the resource, 600 meters deeper.
Whoa. Okay, 600 meters down in Guyana, that sounds, well, technically challenging and probably expensive to drill that deep. Is that kind of deep exploration risk worth the potential reward?
Well, you're right. It definitely increases the exploration cost profile, no doubt about it. Deep drilling needs bigger rigs. It's slower, costs more per meter, especially somewhere like Guyana. That's a factor.
But the upside is?
The upside is fundamentally changing the scale of the project. If they can show that economic grades continue down another 600 meters. You're not just adding a bit to a resource anymore. You're potentially talking about transforming this from, say, a 10-year mine life project into something much, much longer, maybe 20 years, 30 years. It could double or triple the total contained ounces.
So it changes the whole long-term picture.
Completely. They're essentially testing the ultimate depth potential of this major gold-bearing system. For investors looking long-term, taking on that drilling risk is often seen as worthwhile because if they prove that scale, it adds a level of project longevity and potential production stability that very few junior miners ever achieve. It's a big swing, but the potential payoff is huge.
Understood. Okay, finally, let's look at a different kind of viability update. This one is with Liberty Gold Corp, symbol LGD on the TSX.
Black Pine Project in Idaho, oxide gold.
Exactly. And the news here isn't really about finding new gold. It's about proving they can get the gold they've already found out efficiently. The headline: Liberty Gold confirms strong gold recoveries at Black Pine, boosting project potential in Idaho. So they've released results from Phase 5B metallurgical testing, and they're confirming pretty consistent and robust gold recoveries using, importantly, a simple process. The weighted averages were quite strong. The rangefront zone showed 85.2% gold extraction.
85.2%. Okay, that's very good for oxide heap leach.
And the discovery zone came in at 80.5% extraction. They also made a point about rapid leach kinetics, saying over 80% of that recovery happened within the first 10 days.
Okay, that's the kind of hard technical data the market loves to see when you're de-risking an oxide gold deposit, especially one planned for heap leaching.
Why are those numbers, 80% plus recovery, so important for heap leach?
Because heap leaching is all about low cost. It's the simplest, cheapest way to process certain types of gold ore, typically oxides. But its effectiveness hinges entirely on getting good recovery. If your recovery is low, say 60 or 70%, the economics can struggle, even with low operating costs. Hitting consistently above 80%, like Liberty is showing here,
It's a big green light.
it's a massive green light. It says the metallurgy works, and it works well with the simplest method. Many projects would be thrilled to get 75%. So 80 to 85% is really robust. It significantly boosts confidence in the project's economic viability.
And the rapid leach kinetics point, recovering most of it in 10 days. What does that mean practically for the business case?
That translates directly to cash flow efficiency and lower working capital needs. Think about it. If you stack ore on a leach pad, the faster you dissolve and recover the gold, the faster you get paid.
Ah, quicker cash conversion.
Exactly. If you get 80% in 10 days versus another project that takes, say, 60 or 90 days to reach its ultimate recovery, you tie up way less money in the ore sitting on the pad. Your whole processing cycle is faster. It simplifies financing, makes accountants happier, and strengthens the numbers going into their feasibility study. They mentioned that study is targeted for late 2026, right?
Yeah, they did.
Well, results like these keep them firmly on track for that. It provides huge technical assurance, which is critical for attracting development financing down the road.
Okay, great summary. So, looking back across all these updates, Lancaster, GR Silver, First Mining, Omai, Liberty Gold, what's the clear trend you're seeing in the junior space right now based on this news?
I think it's a real dual focus, a mandate almost.
Yeah.
Yes, companies are still exploring, pushing boundaries, defining exciting new high-grade zones like Lancaster did, or like First Mining is doing near surface, or GR Silver potentially tapping into a bigger system. That's crucial for boosting potential profitability.
Right, the grade story.
But just as importantly, we're seeing a very strong emphasis on confirming the viability aspects, showing the scale needed for a modern mine, like Omai's deep drilling is aiming for, and proving you can extract the metal efficiently and cost-effectively, which is exactly what Liberty Gold's MET results demonstrate.
So it's not just what's in the ground, but can we get it out profitably and for how long?
Precisely. These are the quantitative proof points investors need. It's the data that helps move a project from being just an exploration speculation towards something seen as a potentially developable asset. The market demands that evidence.
The data is definitely driving the narrative here.
It has to. And, thinking about GR Silver, finding those complex metals suggesting a porphyry link, and Omai pushing successfully down 600 meters in a known historic belt. It really makes you wonder, doesn't it? It leaves us with a final thought, maybe something for you, the listener, to consider. How much truly massive, untapped potential is still hiding deep beneath the surface, or just adjacent to, these historically known mining districts all around the world? Are these kinds of deep targets, these more complex systems, actually the key to finding the next generation of major mines? That's a big question for the future of exploration.